All right, so let's get right into it today. As I thank everybody for joining us and participating, as we look through the summer, as we look getting to our open enrollment, we do need to have appropriate products that we will be offering to our clients. As we've discussed in the past, the critical illness and the accident coverage that we have, as well as hospital indemnity that we'll be talking about over the next few weeks. Additionally, we need to have a discussion regarding life insurance. And I know that many of you, and this kind of goes to Client Builder, think that you're doing this now. You think that you're doing this on a regular basis now. As we start utilizing tracking mechanisms of how many of these conversations you're actually having, I think that you'll find you will have much better success as you yourself are managing them and holding yourself accountable, as we've been talking about several times. So let's get right into it today. One of the things that we want to make sure of, I hear a lot of, is that our clients don't have the funds for life insurance. They don't have the need, of course, as we start talking about it a little bit. But don't assume that the affordability is not there. Just because your member has a $20 health insurance premium, don't make the assumption that they can't afford to have even as simple as a $10 life insurance policy. Because one thing that we all have in common here, everybody on the phone, everyone that we know, we are all going to die. Okay, unless you're Moses and you're walking on water, you and your loved ones at some point in time are not going to be on this earth. Okay, well, they may be here, but they may be in the earth. And what you need to understand is that this is not a conversation that you can't have with someone. But I hear the conversation of, how's your life insurance? It's not really the way to propose that. Or do you have any life insurance? You're opening up a question, or you're opening up a conversation to someone, if we're looking at our current client base, that may not appreciate it. Just put that bluntly. And maybe what you need to do is kind of sugarcoat it a little bit, or get it to a roundabout way. And when I mean that, get it to a roundabout way, is you're going to have to back yourself into the life insurance and really making sure that your clients know that there's a need, because everyone, quite honestly, knows they are going to die, but a lot of people just don't want to face their mortality. I mean, let's face it. I mean, it's honest. I don't want to think about the fact that I'm going to die someday, and that, someone is going to have to provide, money to my son and my family to make sure that they're taken care of, to make sure that they have got and can live in the lifestyle that they have grown accustomed to. Because if I'm not here as a breadwinner for the family, who is going to provide that to them? Remembering the keys to having life insurance is not necessarily about you, but it's about what are the goals for your loved ones. And things like putting your kids in college, making sure that we can replace income that's not going to be there if someone should die. Making sure that if you die, that your wife doesn't have to go get a new boyfriend or a new husband just so she can pay the bills. There is a value that there is given to someone when you give that family the ability to grieve. Now, I don't know if anybody on the call today has ever lost anyone close to them, but the last thing in the world that you want to be worrying about when you lose a parent or a sibling or someone close to you is having to come up with money, having to pay for funeral expenses, having debtors come and look for someone that has passed away. And a lot of these things can be solved, well, let's face it, with a lump sum of money. And allowing a family to grieve in that horrible time and allowing someone to not worry about money will definitely lend to a comfort level. And that is something that you have an obligation as an insurance agent to talk about. And there's no reason that you shouldn't be talking about it, because, as I said in the beginning of this call, we're all very knowledgeable on the fact that we are going to die. I mean, no one can really argue that with anyone. Okay? Make sense? Moving on. So, what we're going to do is we're going to simplify the portfolio. We're going to simplify the conversation, and we're going to make sure that you don't overcomplicate things. Because let me tell you, the worst thing that we've seen historically from when we've done these life insurance trainings before and some of the product portfolio that we've had, A&B has made a couple of mistakes. I mean, let's just face it, it's happened. We've tried to give too many options to both our insureds as well as us as agents. And if there's too much to look at and there are too many things that you have to think about, then you will write absolutely nothing. And if we can simplify the portfolio, and if we can simplify your conversation with these folks that you're talking to, then you will see those results. And I want to remind everybody not to get greedy. Start small as we go on, and then we can expand. But some of the basic things that you are going to do is you are going to provide your services to the person you're talking to. Let me see what I can do for you and your family. Let me work for you a little bit. Perform a little review. Let's talk a little bit about your needs. What are some of the goals of your family? And make sure that you are in a good place. You know, this is something that we are going to examine the different types of coverage. And as we look at the different types of coverages that are going to be available to you, you'll begin to see some of the complexities that you will deal with. But we've got to get there first. So knowing how you're going to propose this conversation is going to be really a variable based upon who you're talking to. But for the most part, it's the same conversation. If you're rounding out your book, as we discussed in Client Builder, and we've been discussing with as a group here, you're going back to your clients and you're dealing with income verification. You're dealing with people who need to add or change socials on their application, or they have a spelling discrepancy. And remember, every one of those conversations in a customer service capacity is an opportunity for you to talk about other products. Now, before we get into this part of it, I want to make sure that we're very clear. We've talked about a lot of different things in the last few weeks. We've talked about providers' offices. We've talked about ancillary products. And now we're giving one more option, which is life insurance. Now, in all of these conversations, these are options for opportunity. But my clear advice is that you should not be bouncing around from life insurance to long-term care to ancillary products to this, to that, to critical illness, to jump to here, to jump to there, because at the end of the day, if you're doing that and you're not following a consistent path, you will sell nothing because you won't know which way is up. But if you know that you're, for the month of, let's say, April and May and June, all you're going to do is pitch life insurance as your ancillary product, and then that's fine, then do that. If you know that your focus is going to be on ancillary products in the form of critical illness and accident, then that's what you need to focus on. Because as we go through and we're holding our levels of accountability for the number of times you've made these presentations, you don't want to be all over the map. The way that you will get good at a particular product presentation is by focusing on it. And as you get kicked in the teeth because you said something that was incorrect or you said something that didn't make any sense to the client, fixing that, changing your presentation, self-critiquing that presentation, and then moving forward and doing it again. And making another mistake, and then doing it again. And consistency is going to breed profitability in the long run. You got to get good at it. It's going to take a little time. So when you're rounding out your books and when you're talking to your current clients, take the assumption they don't know what your book of business is looking like. And if this is something that you're starting and this is something that is new, there's a few people on the call today like Andrew, who's been very successful with writing life insurance. And the conversation needs to be something that I like to provide all of my clients a free review of your life insurance planning. So you currently have some life insurance now, correct? And that's an assumption. And that is almost that kind of situation where you're guilting someone into saying, oh, well, yeah, I have that. Great. And if you're looking at the family dynamic and if you're looking at that person, what you're trying to do is you're just trying to engage them in the conversation. And if they say yes, then great. How much do you have? Where'd you get it? How did you review this information to make sure that you had enough life insurance for your family's needs? And that's a conversation now that is just flowing. And now, as we start to show you some of the need assessment tools that you have and some of the quoting tools, you're going to be able to take this very basic conversation forward and making sure that they understand it and making sure that you understand it. Because really the key factor is, do you, the agent, feel comfortable with it? Do you know the differences? And that's what we're going to talk about today a little bit further. So, really simple question. I assume you have life insurance now, correct? That is a great question because most people do get a little life insurance. And most people will get that life insurance through work, or they may have a small amount that their mom or their dad or grandma may have gotten them, that Gerber thing that they were when they were like 3 minutes old, all different kinds of things like that. But typically it's never enough. Because when you need life insurance and when you have to have life insurance, it's too late. And at that point, you always realize you don't have enough. Okay? So when you're rounding out that book, offer a review of your services. Offer for you to be able to sit down and spend a few minutes. You could do it right then and there. You can talk to them about that at that moment. But you can also set up some time at a later. You can schedule a call with them. Why not? They're your customer. They're not going anywhere. This would be a great conversation for us to have to review the needs that you guys have, what you currently have in place, and making sure that you have enough of it. We also have it where now what we want to start doing, if this is going to be one of your products, is utilize it during the presentation and plant the seeds during the presentation itself. So as I'm looking up the rates, as I'm going through my presentation and I hear you, great, how many people are in your family? Perfect. How many people need coverage? You're identifying qualified life events. You're identifying if they have a reason for them to buy health insurance. But as you're having that conversation and as you're working and as you're going through that presentation, why not start planting the seeds of life insurance at that time? Great, as I'm looking at this, you're trying to save some money on your health insurance. You're trying to make sure that you've got coverage. I'll make sure that I look at some rates for life insurance. When I'm looking to that and when I'm speaking to most of my clients, I usually find they don't have enough coverage or even any. So we'll make sure we take care of that for you, okay, Mr. Jones? And if you do an assumptive presentation and you know that as we look at some of these rate sheets and rate cards that you'll have available to you, and you can say, great, I can get you a $100,000 policy for probably somewhere around $20 or $30 a month. Should we add that to the policy? You are going to hit less roadblocks because as you are going through the presentation and you're planting the seeds of need, not just asking a question like, oh, you need it, you want it, but if you're painting a picture, because this is not an impulsive sale, someone has to see the need, like within critical illness. If you're doing at time of presentation, you will see much better results. And we've gotten away from that. Just like we've gotten away from doing the critical illness and the accident during the presentation, simply because we haven't had time. But if we get really good at it over the summer and you're planting those seeds, then the progression when we get to open enrollment to add a significant amount of income to you and your family as the agent and adding a much higher level of protection to our insureds that we're talking about, well, these people need the life insurance more than the person who may have $1 million house on the beach. Let me ask a question to everyone. Who do you think is going to have more of a hard time if they lose a breadwinner in the family? Or as we look at a household of a husband and wife who are working, 50, 60 hours a week to make sure that there's food on the table, having a tough time, who needs more life insurance? That family with 2 kids? Or the guys that are living on the beach who work 2 days a week and who are independently wealthy? Who needs that insurance more, realistically? So you say the family. What does everybody else say? And why is that, Preston? Preston is saying that the family needs it. Absolutely. So you've got family income to replace. They don't have any savings typically, unfortunately, with the demographic of folks that are in the Affordable Care Act as we're looking at our most popular A, B, and C variations. Those families are having a tough time with, paying for life. And we need to understand that if they're having a tough time paying for life for a family with two people working or one person working, and then you take one of those people out of the equation, how much harder is that going to be to put food on the table? How are those kids going to go to college if they want to? Let's just assume that not everybody is a full ride athlete because, you can't rely on that. Well, they've got college planning already set up. Well, what happens if that college planning isn't enough or it falls short? Well, my kids will get student loans. Great. So then your kids will have to pay back those student loans for the rest of their life and their kids' life and probably their grandkids' life. So as you're having that conversation, you definitely want to have what we would call together a courageous conversation. And why is that? It's because not any other health insurance agent wants to have that conversation. Because having a conversation about death, and believe it or not, you can say that on the phone, you're going to die. There's no reason that you can't have that conversation with someone because, let's face it, they're going to. It's not a surprise. At least it shouldn't be. And if they sound surprised, then we've got more problems. But having a conversation and when you're talking about who's going to take care of your kids if something happens to you, who's going to put them through college, how's your wife or your husband going to pay for things if one of the breadwinners is gone, if you should die, unfortunately. And it doesn't have to be because of a debilitating illness. You could get hit by a bus. You get hit by a car. There could be a riot in Tampa, and the next thing you know that we've got death coming over on that end, too. We never know who's going to get elected next. We may have more riots, so you never know what's going to happen. We have car insurance. We don't expect to get into a car accident. We've got critical illness coverage. We don't expect to get cancer. But if these things happen, you want to make sure that those that you love and those people that are around you are taken care of. But I can tell you, out of all of the coverages that we sell, health insurance, the dental coverage, the critical illness, the accident, the one policy that they are absolutely going to use is life insurance if they keep it. You can guarantee that you will use this policy because you can guarantee that they're going to die. Now, as we start talking about some of those different types of policies, they need to die at a particular time. So there is always that, but we'll talk about solutions for that as well. But having the conversation about death, is anybody on our call today uncomfortable with talking about death? It's going to happen, right? Not a big deal. Yes, you are going to die. So, people can say some things to you. So you're going to go through this basic presentation. And again, we're very broad strokes today. And as we get to our second and third training for life insurance, we'll definitely go into more presentation details because everyone will get a chance to digest some of this basic information. But let's face it, you're going to hit roadblocks. And in those roadblocks, there's only a few things that people are going to say to you, and they're not very inventive. Okay? We hear a lot of different things on the phone, but probably one of the best things that we hear is that I get it through work. Thanks a lot for asking me about life insurance, but I get it through work. Great, fantastic. You have some then. But let me ask you a question, Mrs. Jones. If you should leave that job, can you take your life insurance with you? Have you looked at the amount of this and see if it's truly enough coverage for you and your family? And then again, how did you figure this amount and the length of your coverage to meet your family's needs? So when we're looking at coverage that you get through on-the-job life, it's typically a factor towards their salary. Many cases, it's annual renewable term coverage to where it is an amount and it just keeps on renewing every year. But that is a variable based on the segment that they're working in, where they're at, and how nice the employer is, and what that employer is providing for folks. And most of them are not portable. So if I leave my job, I leave my life insurance. So if I start working for the city, I'm a teacher, who knows, and I get a life insurance policy, and I worked there for 20 years, but I didn't get any other life insurance because I've been there the whole time and I've had life insurance. Now I'm 20 years older. Now I'm going to try and go get life insurance, and it is going to be a whole lot more expensive. And the coverage that you get just from your job is never enough. Those of you that are on the call today that have been selling life insurance, this is not any new news to you. But you know that it is never enough coverage just what you get through your job. What else can someone say to you? Well, I don't love anyone, or I don't love anything. So there are plenty of us that will talk to people and they just say, I don't need life insurance, I have nobody to leave it to. Well, I always like to make a joke with that, and I ask them if they have a pet. Who is going to take care of Fluffy the cat if you are not around? You can leave that money to an estate, and that estate can then take care of your pet. Think about Mr. Falco. If anything happens to poor Mr. Falco, poor Dave is going to have to deal with all of those animals. I hope she's got a good policy. He's going to be taking care of pigs and dogs and ducks and all kinds of animals. So hopefully for Dave's sake, Mr. Falco has a good policy set up. But all joking aside, how about for this person who doesn't love anyone or love anything? They don't have a church. They don't have a group that they want to provide any type of gifting to. Well, what about if I could provide you with a life insurance policy that you get paid for, that you don't have to die? Anybody think that they know what kind of policy that is? Don't all answer at once. That would be critical illness. I could get diagnosed with a critical illness. I should die, but I don't die. But therefore, that money can be for me. So do I want to go on a vacation? Go. I want to buy a new car? Go. That's your money. You can use it for what you want to do. This way, the money's for you. Now you've just done an upsell to a critical illness policy for someone who's told you that they don't love anyone, they don't love anything. But now I'm going to give money to you, not your beneficiary. So now what's the problem? You don't love yourself? Oh, better yet, you don't love cash, or you don't need any of it. Well, those things could happen as well. You know, this conversation happens quite often. You get a lot of those people, I can't tell you how many, in my experience, where you get them on the phone, hey, how you doing, Mr. Jones? I definitely wanted to do a life insurance review for you and your family. I don't have a family, I'm a single guy. Oh, well, okay. Well, let's definitely take a look and make sure that you're, that you have that life insurance protection. I don't love anyone. I don't love anything. I got nobody to leave it to. Okay. Well, what about if I can give you a life insurance policy that you don't have to die and you get all of that money instead of giving it to somebody else? Isn't that better? You can go on vacation, go buy yourself a new car, whatever you want to do. It's up to you then. It's your money. How does that sound? A much different conversation. And now what you've done, instead of being confrontational with him and saying, oh, you must love someone. No, nobody loves me. I'm just a jerk. Instead of having a challenging conversation with him, just give him exactly what he asked for without actually realizing that that's what he asked for. I don't love anyone. I don't love anything. Yeah, the likelihood is I'm going to die. I don't have any debt. I'm not worried about those kind of things. So, great. Let's just give you some money so you can go have fun with it. Fun is good. I have enough coverage already. Perfect. Great. This is sort of like talking to the person who already says that they have health insurance. Congratulations. We don't want to argue about it. How did you figure out the amount that you needed? Let's ask a really simple question. Now, assuming that you're going to know how to find and identify this amount, which we're going to look at, ask them how they figured out that amount. Well, I have enough. I get it through work and it's twice my salary. Oh, hey, okay, great. Now we revert back to our conversation before about on-the-job coverage, and now you can have that conversation on how that on-the-job life coverage may not be enough, may not be portable. Let's take a look at it and review. Also, if they see the value in having life insurance, why couldn't you have a conversation about life insurance that you don't have to die to get paid for? Again, bringing in another product into this conversation that other product will pay them because they can use both. So you're telling me if I get diagnosed with cancer and then I die from cancer, I'm going to get paid twice? That's exactly what I'm telling you. You get diagnosed with cancer, I'll give you $50,000 then, and then the life insurance policy that you have now when you kick the bucket, just in case you don't kick the bucket for a while because people are living longer. It's getting more expensive to live if you do have cancer, so we want to make sure that we protect you when you live, and then the life insurance will be there for your loved ones if you should die. We know that. Don't be afraid to congratulate them. Don't be afraid to tell them that not enough people have coverage. Don't be afraid to ask for a referral for people who have been putting off a conversation about life insurance. Because if you are putting yourself off and you keep on just saying, oh yeah, I'm going to get that life insurance, I'm going to get it later, I'm going to get it sometime, I'll finally get around to it. By the time you get around to doing it, it might be too late. You may be diagnosed with a condition that finds you uninsurable. You may be rated so high based upon your health situation that it's unaffordable for you or your family, and then you're looking at something else. Couple questions have come in here. Return of premium with a question mark. Some policy will have a return of premium. Those policies are good, and we'll explore a few of them a little later. Plus, living benefits are available on some policies, absolutely. There's also something called an accelerated death benefit, where if you're diagnosed with a terminal illness, and this is something that you have to be very careful of as we start exploring carriers and plan benefits within the life insurance policies that we're going to be having, is making sure that you understand the difference between an accelerated death benefit and living benefits, and that is going to be different from carrier to carrier. Most policies will have an accelerated death benefit where if you are diagnosed with a terminal illness, in other words, you're going to hospice, you are already diagnosed, you are going to die. In that situation, you may be able to get a percentage of the death benefit knowing you are going to die. Not built into every policy, but most of them. With a critical illness policy, you can have a diagnosis of a non-terminal illness, so you're not going to die immediately, eventually, but not right now. And in that situation, you can get paid on that policy or a portion thereof. Putting it off. Putting it off is never a good idea. Sort of like putting off the IRS. Never a good idea. Now is the time. You will never be as young or as thin in some people's cases or healthy as you are today. Therefore, putting it off is not a good idea. If I leave the office today and one of you guys run me down in the parking lot and I die, then at that point, I could not put off increasing my life insurance. I missed that. I missed the boat. So why not? We're talking about it now. What is the reason you're putting it off? What is going to change between today and whenever you get your head out of the clouds? Or are you going to wait until it's too late? Are you going to wait until you're not feeling well? Oh man, I found this lump in the back of my throat. I really got to go to the doctor. I think it could be a tumor. I just went on WebMD. I think my throat is going to fall out. What's going to happen to me? Let me go get a life insurance policy today. Too late. Too late. Yes, there is a chance or a likelihood a fly under the radar policy gets issued. But if in 2 weeks from now I go to the doctor and then all of a sudden they say, hey, how you doing? You've got cancer. Sorry. You are going to die. Too late. I get diagnosed with diabetes because I'm not feeling well. Could have my policy rated. Could have my policy changed. Waiting is expensive. If I'm buying a 30-year policy and I'm buying a UL that's good until I'm 110, and I'm going to be paying monthly or quarterly premiums, and I'm healthy today, but I decide to put this off, and then finally one of the amazing agents over here give me a call and say, you are going to die, you need life insurance. And I say, no, it's okay. And then I go to the doctor, and now I get diagnosed with high blood pressure, cholesterol, and diabetes. Now I go to get that policy, and now that policy is going to go from a very good rate to a very, very bad rate. But let's just say it's not that dramatic. It's only maybe $5 or $10 a month, right? Not a big deal. Well, $10 a month over a 12-month period, still, it's only $120. But when you multiply that over a 30-year period, you're talking thousands of dollars. So why not get the policy at the lower rate since we're talking about it now? So since we're talking about it now, let's do it now. We want to save you thousands of dollars. Even if you get a smaller amount, you may want $250,000, and I may really need that kind of coverage, but I can't afford it right now. Well, let's get you $50,000 now that you can afford. Let's get you an affordable amount today while we're talking about it. Because if you get sick or if you have something happen, then it's going to be that much harder for me to get you coverage at an affordable rate. Also, let me pose a question. We have all of these Affordable Care Act clients who have very, very low cost coverage, phenomenal benefits. So what are they doing? That's right. They're going to the doctor. They're using their coverages. Okay? And by using their coverages, what are the doctors doing? Well, they're running every test imaginable. They're making sure that they're CYA. They're checking their blood on a regular basis, ultrasound here, x-ray there, CAT scan here, this, that, and the other thing. So these folks are going to have very robust medical records. Before, we may have had someone who doesn't go to the doctor often, and they can get through medical underwriting or a paramedical exam a little bit easier because they may not have all of the details. Well, now we have people that are using the policy regularly, going to have a clear medical history, and we are going to have to understand that as well as we're looking at the cost of these plans and doing our field underwriting. But putting it off is probably the worst thing, because if you can get any buy-in at all, any remote interest whatsoever, now that we're talking about it, now is the time. So what else can someone say to you on the phone? What else can someone say to you in a life insurance meeting? Well, it really only boils down to three different things. They either have no time, no money, or no need. Outside of that, what else can someone say to you? I've got no time to do this now. No problem. When'd you like to reschedule? I've got no time to do this. I'm just such a busy guy. Well, if you're running around that much, that means that you're working hard. You must be making good money. Therefore, you do need life insurance, and we need to review your life insurance planning, because the last thing you need to do while you're running around is run into something and get hurt and not be able to earn for your family, or potentially even, that's right, die. Talking about accidents, talking about when people have things going on, and if they are running around and they're driving. I drive up and back and forth to Miami, to Fort Lauderdale every single day. These people drive like a bunch of maniacs. There's always an accident. We don't want you to get caught up in an accident and die, Mr. Jones. Let's make sure you've got life insurance. No money. Well, no money is a poor excuse. However, that's funny, but don't get greedy. There's no reason that even a $10 or $20 or $15 policy would not solve the need for final expense or helping with debt for the individuals that we're talking to. I can't afford life insurance. Well, can you afford $5 or $10 a month? No, not really. You can't really afford not to have that. That $5 or $10 a month can change your family's life in the event that something does happen. Well, nothing is going to happen. Well, Mr. Jones, statistics tell me you are going to die. That's a good one. You are going to die, so therefore let's make sure that if you die quicker than expected, because we never know, that you're covered. No need. You don't love anyone? Do you have a family? Do you have a wife that you like? Do you have someone that is going to take care of your family? So you have no need for any money. We all need money. We all have debt. Well, not all of us. But these are a need. There are needs there. Kids going to college. We don't want my wife to get a new boyfriend. I want to make sure that we can pay the bills. I'd like to get buried and not in the backyard. So there are a need that you can identify as you're talking to folks. And those needs are going to be specific to everyone. But they're all basics. They're all basic things. So what we're going to do now is let's assume that we get someone that's engaging in this conversation. And as they're engaging, we're going to need to figure out an amount of insurance. You're going to need to understand how you're going to quote it. What products do I offer? I hear that all the time. What products do I offer? I don't know. We're going to talk about that today. And then also, what is the process for this? So when we were determining the need or amount, what are the ages of your kids? I'm going to show you a little tool on the Carrie Levinson site that I would, definitely want you guys to look at and start using. We'll take care of all of that all at the same time. But thinking about the ages of their kids. Because if I'm talking about children and I have an 8-year-old, for example, then you know that that child's probably going to end up in college in 10 or 11 years, hopefully. And they would, get probably 4 to 5 or 6 years worth of college that needs to be paid for. So we need to talk about that. How are you going to pay for college for the kids if you're not here? When you're dead, how are you going to pay for that college? If you or your wife are not around, what kind of income do we need to replace? Well, that's very important because if they both pass away, if mom and dad pass away, and there's no income in the family, what do you guys live on now? What's the annual income? And how many years are we going to need to replace that income? And we're also going to take into account inflation in that as well. That's right. The dollar is not worth the same thing today as it was 10 years ago, or in Preston's example, 100 years ago. What type of debt might we want to get rid of if you die? What type of credit card debt do you have? Do we have a house or a home that we need to pay off? And also, do you have savings for final expenses if you die as well? Funerals are not inexpensive these days. Very, very pricey. So there is a large inherent cost there. Unless, of course, you're going to get buried in the backyard. That would be a little bit cheaper, but that might be a problem. Especially if your wife sells the house and someone else wants to come and visit you. Start small. So let's talk a little bit. I'm going to take a break from this, and I'm just going to go over to the Carrie Levinson site, so that way everybody can, kind of see where we're at. And I want to kind of show you some tools that they have here. Okay. So the first thing that we're going to have to do. I was joking about getting buried in the backyard, Scott. It was a joke. But, Okay, so let's look at the Carrie Levinson site. So this is where all the magic is going to happen, okay? So as you're looking at the Carrie Levinson website, everybody on this call today should have a login. So once you log in, you'll be able to do everything that I'm talking about here today. Obviously, we should be long past the appointment process. So your online appointments are all done here. But what we're going to do is we're going to talk a little bit about the quote engine and the term quote engine. One of the things we're not going to be doing is we're not calling Carrie Levinson for quotes. Okay? So I hear a lot of times, I'm just going to call Carrie, they'll give me a quote. No. You need to start this and you need to have some ownership of this on your own. That's why we're doing this training today. That's why we're going to do a series of these trainings. But you need to be able to pull these quotes up. And I'm going to talk about the carriers in a moment as well. But the first thing I want to touch on is our need analysis tool. So a need analysis tool is very simple. This is as simple as it gets, everybody. Okay? So what will happen is if you come into the quote calculator, there is the button right here that says Determine Need. It's going to open up a screen. And now from here, you can do a little estimating. So if we needed to replace income, you can do it with a handy-dandy calculator or an abacus. But you can just hit this help calculate. So if you're talking to one of your clients and your client is the breadwinner, he says, yeah, I make about $15,000 a year. And, if something happens, I'd probably want to replace that income for my wife for at least, 10 years. Then what happens is we can calculate that, and it gives us a number, including inflation, of how much we would need to replace income. Ask them how much debt that we want to cover. So we've got $70,000 worth of debt that we may want to make sure that we get rid of. That could also include debt for a house or final expenses. We can calculate how we want to do. We can do selecting of college and basically going through the college costs. But you can also use the slide bar here to think. I mean, if your kid's going to be a doctor, you can put it up a lot higher if there's multiple children. But otherwise, you can figure on an amount for college needs. And then this is just going to add the numbers together. That's why this is nothing dramatic. But what this can do is help you calculate what that potential need would be. Those individuals that are telling you, I already have it from work. Well, great. If we're using this guy as an example who's making $15,000 a year and he gets 3 times his salary, well, that's fantastic. He can get, let's just say he's got it doesn't even, there it goes. He's got $50,000 or even $75,000 of life insurance now. Perfect. We don't have any college savings. Do we have any cash or assets? Let's just say I've got a little bit. I got $30,000 worth of that. And then this is saying that this guy only needs about $100,000 worth of coverage. So, a lot of people will say to you, do I need 250? Do I need 300? Start small. Utilizing these potential needs in this conversation about what you're looking at and how they need to get some coverage. We can close this out. We can actually put that need amount once it's calculated right into the quote. So if, for example, I just did this and then I came down here and I put request a quote, it then pops in that number, that amount of insurance to the dollar into our quote calculator. Now, what we'll also have to do is in the identification of our members, of the length of term that they're going to need based upon the family, based upon, the kids' ages and what they're looking to accomplish, as well as their age. You would then select your term length, because our main focus for this conversation today is going to be term. We do have guaranteed ULs. We're going to have simplified issue products as well that we're going to talk about, but I don't want to get complicated. Because again, the complication is usually what causes us to have problems. So, we start small. Go back here. As we're starting small, term insurance is a great solution. It's typically the best solution for most of the people that we're talking to. You hear these complicated things and people say, oh, well, they want whole life. I'm sure they do. Oh, well, they want to do this and this and they want cash value and all this. I'm sure that they do. But you, as the agent, has to start small. You've got to work to those things. We need to get you something. We're talking about it today. You don't have any life insurance whatsoever. We know we're going to need some level of term coverage, so let's start with term and let's go from there. We'll be able to provide them a higher amount of protection, a higher death benefit for a lower price. I usually like to tell everyone that term insurance is like renting a home. And you can get that home on the beach for an affordable level, because if you were going to buy that home on the beach, now you're talking about a whole life policy, which is a lot more expensive. Many of the term policies have an option to renew, a guaranteed renewability. However, be careful with that, because those guaranteed renewability plans are going to be very expensive. Because when you turn 60 or 70, and then at that point you want to do a renewal on that policy, your premium may go from $12 or $13 a month depending on when they bought it and what the amount is. It could be multiple hundreds of dollars at that point. So why would you not want term? Well, because it's going to run out, right? What are the other downfalls to term insurance? Well, the downfalls to term insurance is there's no cash value. There's downfall to term insurance is that there's not as much flexibility. Sort of like leasing a car. But a lot of people, they get hung up on this whole life conversation, or they get hung up on these, IUL conversations. But most of the time, when you talk to people that want those products, they don't understand the real inherent cost to having those products. And what we're going to do is provide them with other solutions that will give them the same type of solve, whether it's cash value, whether it's loans against the policy and things like that. But what we can also do is we can blend the policy. And what do I mean by that? Well, if I'm looking at talking to someone and they say, oh, yeah, I know I'm not making a lot of money now. I really want a whole life policy. I'll just wait until I can afford the whole life policy. We already know that waiting is not a good idea. That waiting is not something you should do, because if you wait, you could get sick, and then that term policy will be as much as that whole life policy. So what should we do? Let's get you a term policy now, and we could explore the whole life or the UL later on and see if we can blend two different policies. Because I may need a term policy, I may need $200,000 or $300,000 worth of coverage until my home is paid off and my kid goes to school. But after my son has graduated from school, my house is going to be paid off. I don't need that much insurance later on. So maybe I do a term policy first to solve all of those big needs, and then I could do a UL that gets me to 110 age or something more permanent later on down the road. So maybe you do $100,000 worth of UL and you do $300,000 worth of term. Because when I'm 70, my financial needs should not be the same as when I'm 40. I should have things paid off. I should have less debt. But who knows? Complicated cases I don't want to start with. All the time we get people and we get agents, and the first case that you get, it's a complicated case. And they want whole life insurance, they want this, they want that, they want all of this stuff. But you've got to control the conversation and understand the affordability of these more complex life insurance products. We're not dealing with the higher income or higher net worth individuals, and that's not what we're going to start marketing these products to at first. As you become more well-versed in these, we were going to move from basically the C variation plans all the way through the unsubsidized plans. And as we're doing that, the need for the complicated cases are not going to arise on our B or C variant policy holders because their income levels are much lower. Everybody and their uncle wants to have whole life insurance, but who can really afford it? When you look at a whole life policy, a paid to 65 policy, through a reputable carrier, even for someone who's in their early 30s, you're looking at a few $100s a month for that policy, at least. And those policies are great, but there are alternatives. And there are UL policies, there's indexed UL policies. But what we're going to do as we start this program for everybody on this call today and everybody that's beginning to sell life insurance who hasn't done a lot of it before is we're going to start simple. And as I said, we can build a case for those people who have the more complex, but let's solve the immediate needs now. Let's talk about the term policies now. Let's not overcomplicate it. Because if we start complicated, you're going to spin your wheels, and you're going to overcomplicate the situation. You're not going to keep it simple where if you die, your beneficiary gets paid. Very black and white. Let's make sure we replace the income. Let's make sure that we give less options and more of a solution. Okay? Because again, we're not calling carry for these term quotes. This is something that you're going to use the tools that we have at our fingertips. So let's first start talking about carriers. So really what we're going to do is we're going to break everything down into its most simplistic form. So the first thing we've got is non-med term carriers, okay? Non-med term carrier is going to be the most important thing that you can do. I can tell you quite honestly, historically, that the non-med is preferred, and that is because your members are not going to do a paramedical exam. As much as they tell you that they are going to complete those exams, historically, they are not going to do them. So we've got 3 options for non-med. We're actually going to add a 4th, but for today's conversation, we've got 3. We have a surety, which is a non-med up to $350,000, and that contract payment and commission payments is advanced up to 9 months. You can take that as earned as well. If you have credit problems, then you will probably end up getting that as earned. Sagicor is going to be our second option. That is a voice app, but that is paid as earned only. And a new carrier that we're looking at is Manhattan Life, which will provide a return of premium option and a critical illness option of 50% of the face value of the life insurance policy. That is up to $250,000 worth of coverage. And that policy is also going to have advanced commissions for first year. So 3 solutions. Non-med. The direction that you're going to want to go in is non-med, especially for the smaller amounts. Anything under $100,000, you don't really want your client to have to go through the paramed and all of the other stuff that's in line with that. These policies are going to be a little bit more money. The reason that they are more money is because of the convenience factor. There is a convenience for not getting or not having the carrier really look diligently at your medical history. If the client has a significant negative medical history, then before you process the application with these carriers, we have underwriting guidelines that we can review, but this is someplace that we will start. So if you see another carrier that's $3 less expensive, we're not going to work with that carrier, and there's a reason that we're not working with that carrier. For example, ANCO has got a new product out there that is non-med, but they're not issuing very much of that business. The offers that they're coming back from the carrier, where they're usually having to place with someone else. So let's, again, keep it simple. Let's not try and reinvent the wheel here, and let's stick with these 3 carriers for now. Be advised that typically your client is not going to want to deal with that paramedical examination. And if you doubt me, I can let you talk to 1 or 2 agents that can clear it up for you, because I promise you, looking at what has happened in the past makes a big difference. Term carriers. No, depending on the level of the policy, they will be required to do a paramedical examination. There are some instances when these carriers will not have or require a paramedical. They may just require blood and urine to be sent in. So there could be different things that they could require. But for the most part, when you're looking to a full-blown term carrier, at that point, we are going to be dealing with these 3 that you see here. All 3 are, yes, they are advanced. So as long as you qualify for the advance, these will all advance you up to 9 months. My advice as you start working with these carriers is to try and get your clients to pay quarterly. Now, this will help with chargebacks. This will help with the administration of the policies as well. So there are other carriers out there like Prudential, for example, SBLI, John Hancock, but all of those carriers are going to pay you as earned commissions. So if you find someone that you may love selling a ROP, which is a return of premium, and that's great for you, but the carrier that sells it doesn't do an advance on that return of premium, then there's not much I can do on that. So maybe you want to look towards some of these more simplistic offerings of the non-med or the term carrier, depending on the level, so that way you can get this policy set up, and that way you can begin to explore some of those other options. But again, let's keep it simple. We're going to have UL carriers, and we're going to have Mutual of Omaha is going to offer a UL. It's not going to be a cash value UL. It's not going to be something that's going to be beginning to build a lot of value, or any value for that matter, for your client. But what it does do is it gives you an opportunity to write a universal life policy up to age 110, the life of the client, and that is a non-medical, no examination, up to $250,000. And that's Mutual. Now, if you're going to do a permanent UL, you're not worried about cash value, but someone will have to do a paramedical exam, then our best carrier is going to be Protective Life, believe it or not. Their rates are going to be very strong, but they will have to do a paramed. When it comes to more complicated cases, which are going to be cash value IULs, EAP programs, going to be through Genworth and North American, and these are going to build cash value for your members. But again, for most everyone that is on our call today and getting into this, we're not really going to talk too much about the IULs. And if you get that situation, you're going to table it, get some information. Perfect. We'll give you a call back. And then you're going to continue to go through the term cases, and we can explore the unique cases at a later time, but we definitely don't want to get hung up on them. Genworth is offering a long-term care rider with good growth and an e-app on their indexed UL policy. So very good option for you there. So I did put together a little summary for everyone, and I will send this out to everybody. So that way you can see it has our non-med term carriers, our medical term carrier products. As we go through these carriers specifically through additional trainings, we will really rip into the underwriting of them, so that way you can become a little bit more field underwriting experts. One of the nice things that you'll find is as you start to gravitate towards a carrier. So, for example, on the non-med, my advice is Assurity. So if you're looking at the Assurity product line, you'll begin to know their underwriting. And as you get someone who's declined, or you get someone who is given an offer that is not that good, well, at that point, when you get that response, you can contact Carrie Levinson, or you and I can sit down and contact them together. And then what we can do is we can find out where we should go with this client. Maybe based on their medical history, we should be looking at a medical product at a different level. So we'll take them on a case-by-case basis as you start becoming active. But quite honestly, you know, the first time you get a case and someone says yes, don't come up to me and say, great, this person wants an indexed universal life policy because they want to have cash value. Okay, so Scott Webb is asking a question. So the question is Fidelity Security the only carrier that pays renewal commission? Yeah, it does, but we're not really selling that because your compensation on that product is about 20 to 25%, and then your renewal is about 10%, maybe 12. So that is an absolute last resort. We're not even going to be talking about it. I know a few of you have been exposed to it through conversations with Carrie Levinson. But from a first-year commission aspect, on a non-med carrier, their comp is too low. It's good for long-term, but someone who is doing a non-med product probably doesn't have the longevity that someone who is going to be doing a medical term product. The buy-in is not there. They're not doing anything to get that coverage. Unless the reason that most people take the non-med term is due to convenience. And the term carriers don't typically pay a renewal commission. So you're not going to see renewals on the other term carriers. They are paid directly to you. They will be EFT'd to you. Most of these carriers pay weekly, so that way you would get your commissions paid weekly. As we start talking about underwriting on these products, I want everybody to understand clearly we are not doing the underwriting and we're not helping you do the underwriting. So the girls that we do and having customer service that are here in Tampa are not going to help facilitate customer service for your life products. We will help facilitate customer service for your Blue Cross, but this customer service is done by you. That's making sure paramedicals are done. That's making sure that people pay. That's making sure that you're staying on top of these things. That is going to be your ownership that you're going to have to do. If you need help in understanding that, then that's absolutely not a problem. So let's go back to the Carrie Levinson site, and as you can see here, we have our choices for doing quotes on simplified issue products, or guaranteed non-terms. Your simplified issue products are going to typically be your non-med. You have your choices for term length as well, and then you can just simply show top 10 here. You can show view all quotes, start over, lots of different options. You need to get in here and play with this a little bit. So if you're looking at these two 10-year terms, and I was looking at $200,000 for a 40-year-old, and this is non-med, well, that price is pretty expensive, but there's not a huge difference in that price. But the difference in the $21 premium and the $28 premium is one is paying you in advance and one is paying you as earned. The assurity is a couple of dollars more, and as you can see, the fidelity jumps up down the 10-year here. Look at this, is not even close. So you can go through, and remember, you're looking at this policy. If you want to do the Sagicor because you're fine with getting paid as earned, then go ahead, you can do that. I would personally recommend the Assurity product on the $7 difference for this particular product. But what you're going to find is that most of your non-med products aren't going to be $28 products. What they're probably looking at is people that are more looking for, $50, $60, or $70,000 worth of coverage. And on that same 10-year, if I'm showing the top 10 again, I can adjust my quote, come right back down, and then I can see now I'm in a $12 or a $14 product. And that $12 or $14 product is going to be a lot easier to sell. But is it likely for my client to go get a paramedical examination for a $14 product? Probably not. So manage their expectations accordingly and say, hey, let's just do a non-med for this. Now, I know some of you are probably saying, yeah, but if I go ahead and I do a medical for this, the price is going to be that much cheaper. But yeah, absolutely. But are they really going to do it? So if I switch it over to standard underwriting as opposed to simplified issue, I'm going to end up seeing a different selection of products. And we can see our Genworth here at a whopping $8. Woohoo! But still, as we look at these different programs that are available, we can then have that conversation. But as you look at this, I can go to a 30-year term here at $26 for that $70,000, and this is non-med $350. So that's a non-medical product. And again, as we start exploring the products deeper and deeper, we'll go through that together. So this is very important that you get in here and you play with this quoting engine. You can have this quoting engine open on your computer all the time, so that way you're determining the need, you're determining what they need. And then you can also look at your rate classes, and you always want to try and stick towards the standard costs. Okay? Because if you're quoting everybody at preferred best, you're probably not going to get that rate unless they're an Olympian. And I'm not talking about that guy who's now a girl. Good Olympian on the Wheaties box. So, know that this is a great tool. This is how you should definitely use it. You should get in here, start playing with this on a regular basis, and start talking about it. And with this, once I show my top 10, and once I find out what is going to be good for me, then I can actually do our enrollments with a drop ticket or an e-app right here to complete that enrollment. So all of it is going to be done right here at your fingertips and then follow up from there. And in our future trainings, we will go through some of that follow-up and those follow-up procedures. So as we look at these products, then we have our UL. ULs are something that when we quote our ULs, there is an option here for it down at the bottom where it says Guaranteed UL. You can show those also. But keep in mind those individuals that are going to need the paramed and who are not. So banner is coming up here on a UL, but you can see it is a significant difference in price. Because this is $70,000 for this male, guaranteed until he's 100. That rate is not going to change between now and the time he's 100. So he's not going to outlive this insurance. He's not going to get to a point in his life where he's going to say, I've got no more insurance. The worst thing in the world is for someone to outlive their insurance. And you have to make sure that you're doing planning appropriate. Most of our clients, we're not worried as much about that because we're looking to solve more of an immediate need. And as you get them ingrained in having a life insurance policy, you can always revisit them with an annual policy review when you're doing your mid-year check-ins and things like that to look at more of a robust planning as you get better at it. So what's next? Next is to start talking about life insurance. Make some mistakes. Start bringing it up. Start asking some questions. Start identifying the need and determining the needs. Start creating the needs. Plant the seeds while you're creating the needs. Ooh, I like that. Do you have life insurance now? Does everybody on this call, because we've already identified everybody on this call, as much as I love you, you are all going to die. Does everybody on this call have life insurance? Excellent. Scott Webb, you have 2 children. 3 children, don't you? 4 children. 1 on the way that you know about. Need to have coverage. Do a quote for yourself. Make sure you start simple. You know how old your kids are. You do something simple. If you don't have it, assess your own situation, making sure that you have the coverage that you need. Making sure that you understand when you're doing an assessment to be realistic. Making sure that you understand that you are being realistic and you're not trying to over-insure your individual. Preston, what happens to someone that you over-insure, that you sell them a life insurance policy that they can't afford? They don't keep it, and then you end up getting a charge back. So making sure that you have that. You get people on the phone that tell you they can't afford health insurance. Well, guess what? If they can't afford to have health insurance, they really can't afford not to have life insurance. Because even though you're not going to be able to pay for your health insurance, you're going to get sick. Then if you get sick, you're going to die. At least that way your family is covered. It's a great rebuttal for people who says, I don't need any health insurance and I don't want your health insurance. I hate that Obamacare stuff. Fantastic, I understand. So if you're not going to have health insurance, let's make sure you get life insurance so when you get sick and die, you at least get some coverage for the people that you love. I don't love anyone. Oh, okay, great. Well, if you don't love anyone, then we'll make sure that we get you some critical illness coverage because that way that money will be for you. Know your prospects. Start asking them leading questions like we're talking about right now. Overcome the rebuttals with solutions, not confrontational conversations. It's a big thing. We don't want to be confrontational. And play around on the Carrie Levinson site. Because if you can get comfortable with this website, then it's going to make our life easier as we move on to some of our other training that we're going to talk about, things like final expense for your seniors. We've done very well in Medicare. You're going to have to make sure that you've got that taken care of. But you've got to get comfortable. You got to start doing it. So what are the levels or what are the hurdles that you guys are facing now in even talking about it? I understand that there's so many carriers. Now that we've limited it to a smaller portfolio, that's got to help. But what type of hurdles, if any, have you had doing this? Laziness is an answer. That is a very good, honest answer. Maybe you can get life insurance for your Candy Crush or carpal tunnel. Seriously, so has anybody got any questions? The quote calculator, very simple. Has anybody looked at this? Has anybody played with this quote calculator? Okay, the determined need is there. That's been there for quite some time. Okay. So then what we're going to do is then we're going to come in here, so probably next week or the week after, we're going to start exploring the product-specific underwriting that you guys are going to need. But again, the non-med, the parameds, those kind of things, very simple. We just got to start doing it. So any general questions that anybody has on today's conversation? So Ryan's question is, if we do a quote for somebody and they want to buy it, can we just do it? The answer is yes. So most life insurance carriers, you would need your intake done on this already. I would go in there and select the carriers that we've talked about today, so that way you have what they call a soft appointment. Okay, the soft appointment will then allow you to write the business, and they will appoint you once you have your first piece of business. The only one that doesn't do that is Manhattan Life. Now, what we'll do is then you will have access to it. They'll appoint you at the same time, and you can watch that from there. And that's going to be in the back office on Carrie Levinson in case status. Okay, so you can see pending IGO cases. This is basically your back office for Carrie Levinson, where you can view all of your cases. You can start a new case. You can, take a tour. You need to get in here and play with it. Jeff's asking for more product knowledge. We're going to do that over the next few weeks. There is plenty of information here. There are videos. There are underwriting guidelines on all of the products. All of the forms are here as well. There is a form center, so you can actually go through all of the paper forms if you'd like. All of the product knowledge that you can imagine is really here at your fingertips, depending on how much you want to read. There are links to all of the carrier sites as well that you can access. You're going to want to do e-apps. E-apps or drop tickets, in essence, are very similar. The question is, what's the difference between an e-app and a drop ticket? Basically, what's going to happen on a drop ticket, it's going to send it to the carrier. The carrier is then going to contact the insured or the proposed insured and go through the application with them there. An e-app is where you will actually complete the application, answering most of the application information, and then an underwriter may call for follow-up based on the product that you have selected. The cycle times are much faster on the e-apps, so you're going to want to look at the e-apps. I know another question has come up about whole life as well as simplified issue. Assurity is going to have a solution for you there. They have this Assurity Life Insurance Company has a great little quote engine. that you can utilize here, where you can put an age. They will issue up to 80. This is a simplified issue. You can see some of the parameters of the simplified issue products here, and it will also offer a graded or modified death benefit based on the medical questions. So what you can do here is just to see, if you're talking to a 45-year-old male, non-tobacco, and getting a quote, you can see that a simplified whole life product for this gentleman, $35, and a very simple enrollment. Now, it is a little bit more money because look at what that face value that it's giving me. A whopping $15,000. These are final expense style policies, which are not cheap. No final expense is inexpensive. Most people that are buying the final expense is because they don't want to answer medical questions. They don't want to go through that because they can't. And that's where we have these options. Now, on the Carrie Levinson website, there is a final expense and there is a final expense quote engine. Okay, and you can go in here and look, and you'll see companies like Phoenix. You'll see other options that are available to you. I would stick with the surety, keeping it all in the same family. And again, as we start doing more product-specific training, then we can go through that. I prefer an IUL over a UL. What's my opinion? My opinion really doesn't matter much. I like an indexed UL simply because there's cash value that's building. It just depends on the particular situation and what the client can afford. So that is going to be a big difference. Trying to show a minimal amount, 10,000, but not choices to increase to 25 increases, top 10. Is this common? It's just that the amount that you're showing or trying to show in the quote engine is too low based upon the parameters. So you'd have to go to a different product in there. All right. Some good questions. Any other questions? Transamerica wasn't mentioned in this training. Why would you not recommend them? Because I didn't. There's been changes to Transamerica, and I'm not recommending them. All right. Any other questions? Went a little longer than I wanted to today. I do apologize, but it was a lot of information. Now what we'll be able to do is really fine-tune things and start paring them down tighter and tighter from product to product. I definitely suggest everybody starting with the non-med. Start simple. Even if it's a couple dollars more, take a lower amount or face amount and start getting it comfortable. I don't want everybody to get tied up with all of the banners, the AIGs, and the Genworth, with all these people that say, I'm going to do a paramed, and then they don't do it. So you get really excited, you're thinking you got some money coming down the pipe, you've got some great life insurance plans. Until they do the paramed, there's nothing. You might as well not even write it. So if you have any doubt whatsoever in your mind, and even if you're pretty confident that they're going to complete that paramed, my advice would be to start with the non-med at a lower amount. You can always do a higher amount on the term policy later on. But let's get it set up. You're thinking about it today. Let's get it issued quickly, and let's get it done. Let's get her done. All right. Any questions? Comments? Opinions? All right. Fantastic. I want to thank everybody for their time, and I appreciate everybody taking time out of their busy schedules for today. And let me know if you got any questions, and we'll go from there. Thank you very much, everybody. Have a great day.